There's been a lot of talk about tariffs, and that talk has seemed to spook the market and the economy. Find out my thoughts on this edition of the Video Market Update. Now, tariffs are nothing new, especially with the current administration having used them at times in the first administration. The difference this time is the uncertainty around what's happening with them. Goldman Sachs recently did a study that showed that for every 5 percentage point increase in a tariff, it results in a 1 to 2% decline in the market. So if you look at a 25% tariff at this country, but it's a 15% increase, that would result in potentially 5 to 6 percentage points of a decline in the market. The challenge with tariffs is that in most cases, a tariff is a tax. It's a tax on someone. So think about it from this instant. If a company says, we now have to pay this increased tariff because now we've tariffed another country, and so in turn, they're now using that tariff against us, and we're now in this semi-hot trade war, a company has to say, well, as a company, we will absorb that additional cost, and we will not pass it on to our customer. Well, what happens at that point? That means their profit margin shrinks, which means their profit in theory shrinks, which means if they're a publicly traded company, they're not worth as much as they were pre-tariff. If a company says, well, we're not going to absorb that, we're going to pass that on to our customer, then the customer has to decide if they want to spend as much. If they choose not to, then the revenue of that company would go down. The profit, in theory, would also go down, and that publicly traded company would be worth less than pre-tariff. And so I think that the tariffs have caused a lot of uncertainty, and you can see it here in this chart from Goldman Sachs, that the uncertainty right now with economic policy is high. You can see early 2000s dot-com bubble, COVID, there's been uncertainty before, but this one feels artificially manufactured and on some level possibly unnecessary. Why? Because if this is going to create a trade war, that could have some short-term impacts or some long-term impacts. I think the bigger issue than the tariffs is the number one thing that the stock market dislikes. And if you've been listening to these videos for any period of time, going back 5 years, you'll know the number one thing the market doesn't like, drum roll please, uncertainty. The tariffs have created uncertainty. Why? Because the tariffs will go into effect, and then the next day we'll hear, except the automakers, you get a month off. Or if tariffs have gone into effect, well, but not on this specific part of the country, but just on this part of the country. And so it's created uncertainty of, well, are these tariffs really going to be used for retaliation? Are these tariffs going to be used more for negotiating? Or are these going to go into effect and stay into effect, which again, could cause some longer term issues and some shorter term issues, but at least companies know how to work around it. Companies are smart and sophisticated, and they figure out how to work around taxes and regulation and other things. But the uncertainty around, are they here for the short term? Are they here for the long term? Are they going to be moved around? That is what's caused the market to react negatively, and that's why we've seen a healthy decline since election day. So I know this was a lot. I know that you're probably all sick of hearing about tariffs, but I did want to just add some context and color to the email I had sent out at the end of the week. If you have any questions on that, let me know, or anything you're seeing in the news. If not, I hope you make it a great week.